But Shriram Transport is the other company on focus, and the case for a chat here being the outlook on CV demand, the pricing trends, the hike in truck axle load by 20 to 25%, and the impact that it would have on the Indian accounting standards and the MCLR hike as well by banks. So let's bring on board Mr. Umesh Revankar, the MD and CEO at Shriram Transport Finance. Mr. Revankar, thanks so much for joining it today, and so glad that you could be part of ET Now's 9-year journey, and you're joining in the anniversary week.
Okay, congratulations.
Thank you so much. Mr. Revankar, the government is going to hike the truck axle load for heavy vehicles by 20 to 25%. How do you see this move impacting the overall CV space, especially used CV space where you have major presence?
The increase in axle payload was some demand was there for quite long time from the transporter, because the road conditions in India has improved. The vehicle quality of the vehicle and overall manufacturing of the vehicle components have improved, and therefore the transporters have been demanding it. And I think that is a very good move, and people who have been demanding it will be very happy about it. And also that long distance transport will become little better in the sense that they would be able to carry a bigger load and a longer distance, and the turnover time will improve because of this. So overall, I feel the efficiency of the fleet will improve significantly in the going forward, but there is still not clarity on whether the vehicles which are manufactured from particular date will have this approval, or the vehicles which are already existing. So that is some clarity I don't have. More probably it is for the vehicles which are manufactured from particular date, they will be allowed to carry. But once that becomes a norm, then there will be overload in other vehicle also. So probably there will be some advantages for the existing vehicles to carry a larger load, and especially with the diesel price going up, this is some kind of a relief for the transportation industry.
You know, the government has stated that NBFCs need to implement the Ind AS from 1st April. What will be the impact on your financials? Do you see higher provisioning on account of that, more protection towards the NPAs?
For us as a company, we have been having this what you call accounting parallelly. We have been maintaining the accounts as per the IFRS standards because of our partners' requirement. So we don't see a big change in the accounting practices, and since we have been providing higher coverage in our accounts in the last couple of years than the industry peers, so we are well covered. So I don't see any challenges or change in profits because of that.
GNPAs have jumped 22% quarter on quarter due to NPA recognition, adjusting to 90 days per due. What is the outlook on asset quality there?
We have already moved into 90 days, so there is no further surprises the way we are maintaining the accounts. I don't see there is a further increase because this quarter is likely to be good, and next 2 quarters, if the monsoon is well spread across the country and there are not many drought kind of a situation, I think we should be able to improve on our NPLs. We had a gross of 9%, 9.15%, and we expect it to improve in the next 2 quarters. So I look at the future as the gross NPL coming down, and significantly more improvement will be there in the credit cost. So, credit cost, which is around 3% now, should come down by 40-50 basis point in next 2 quarters, and that should improve our bottom line very much.
Okay, give us also some perspective on how a rising interest rate environment would impact the overall demand for financing going forward. Do you feel like that could be a challenge?
See, the demand for finance do not what called get disturbed because of increase in interest rate. So, I don't think because especially if it is if you are in a used vehicle and where you are giving credit to the needies, people who are dependent on finance, there will not be any shortage. But if the economy is doing well, and if there is a good demand for freight transport, if the GDP growth is good, economy is good, the monsoon is good, more output, agri output is there, then naturally you need more vehicle. So, definitely the demand will come, and for us passing it on to the consumer, if it is just 15-20 basis point, it is not a big challenge, and I don't think it will dampen the credit demand per se.
Okay, banks have started hiking MCLR already, about 2 weeks back. So, how do you see this impacting your cost of funds and margins going forward?
See, most of our borrowings are long. So, since it is 3 to 4 years maturity, we have around 1/3 to 1/4 of our borrowing coming to an end this time. And if I go back to 3-4 years back, our cost of funds would have been almost same as what it is now. So, since we do not have a short term borrowing, we do not see a big impact, because 3 years back I would have borrowed at same rate what I am borrowing now. So, the maximum impact that could be there for us in this 1 or 2 quarters, first 1 or 2 quarters would be around 15 to 20 basis point, which we would be able to pass it on to the customers. And only thing is we would be looking at more retail borrowing now this year, mainly because we feel that the funds available with banks and the institution would be restricted. So, the retail borrowings like deposits or NCDs could be little costlier. So, but however, we would be replacing the borrowing which is maturing now, which we have borrowed 3-4 years back, which is almost on same rate. So, I don't see a big jump as far as borrowing cost is concerned. However, there could be 15-20 basis point jump, which we would be able to pass it on to the customers.
Right. What percentage of your borrowings come from banks, and how will your borrowing mix change in the future?
Banks is around 25% now, and I don't think we already have reduced from last 1 year from around 30%, we have brought it down to 25%. It can probably go down further to around 20%. But the retail resources we would be looking at, and there are some other interesting avenues which are opening up for us, like masala bond and borrowing from the overseas market, which you are looking at it. So, probably we'll have to wait for at least another 1 or 2 months to see the changes, but definitely a reliance on the bank will come down.
Okay, Mr. Revankar, such a pleasure speaking with you today. Thank you so much for taking the time out.
Thank you. Yeah.
Okay, that's the word coming in from Mr. Revankar on how one needs to really look at what's going on in the financial space, and yes, what is the case really with Shriram Transport Finance in this rising interest rate scenario.